Today I have 8 price action step-by-step trade studies that will help you find trades every single day. Let's start with the breakout buildup, which is a trend continuation system and one of the most powerful systems. When we start breaking down this chart, what can we see? From the bottom left to here we can see that the market has been in a strong uptrend. And that's really important. You always want to start your analysis with identifying the overall trend direction. In a trending environment, it's absolutely normal to see the market move sideways. And by analyzing those sideways phases, we can gain a lot of understanding about the underlying strength of the market. Are the bulls in control? Are the bears in control? Who is gaining strength? Who's losing strength? And what is the likely path going forward? What we can see is that there was a period of quite strong selling going on here. This could also be just profit taking here. But then afterwards, this changed significantly, and we see that the market started making higher lows. For our pattern traders, this will look like a cup and handle, where you here have the part of the cup and this is the handle part. The handle part shows you that the market is showing extreme strength, and whereas previously the market was selling off away from this resistance level, and this time the market is really staying close to the resistance. This can also tell you that the selling interest has been fully absorbed and there's not a lot of selling interest left anymore. Those absorption phases, this is the build-up that we are looking for. It shows us that there's a lot of bullish pressure building. The breakout has to be with a strong candle. It's really important that the breakout happens with a strong candle. Also, you want to see when the breakout is happening. In this case, this is happening right around the US Open. And that's a really important detail. Don't trade breakouts when they happen at a random time. Make sure that your breakout continuation trades happen at an open. It can be the London Open, the New York Open, the Asian Open, but the breakout has to occur at an open because that shows you the intent and the overall market sentiment. And afterwards the market exploded higher. So the sideways phase here, the cup and handle, is just a temporary pause in the market where the buyers and the sellers are battling out the next move. And by being able to understand and read the nuances of this sideways phase, we can often position ourselves with the majority because that's exactly what we want to do. We want to see where the market is likely going, driven by the majority and the big players in the market. I talked about the 1, 2, 3 pattern in the past, and it's one of the most important patterns that you can trade when it comes to finding new trends and also understanding when a trend is over. What we can see here is that the market is in a downtrend. The market made lower lows and lower highs. This is changing here on the right side. First, it's important to see that the market is not making a new lower low. The market is not even coming close to the previous low. That's a really important market tell because it shows you that the sellers who drove the price down in the past are not in the majority anymore. At the same time, we can see that the market is now pushing above a previous high. This shows us that the sellers were not able to defend the previous resistance area. Those two confluence factors together show you a significant shift in the underlying trend dynamic. For the 1, 2, 3 pattern, you're looking for fair value gaps. You can also look for supply and demand areas at the breakout sequence. So this is the point 1, this is the point 2, and this is the point 3 in our 1, 2, 3 pattern. Here we have a fair value gap that the market is retesting, and once again the market is making a higher low. That's the second higher low now in this market turn. One of the most important things when you are looking for a point 3 in the 1, 2, 3 pattern is that you're looking for a strong impulse in the market. You want to really see that the point 3 is confirmed with a strong bullish push. This confirms the overall trend change in a very meaningful and significant way. 1, 2, 3 traders are looking for trade entries here on this strong push. Again, you can use time as another confluence factor. You want to see that the momentum push at point 3 is happening at a significant time. It can be the London Open, the New York Open, the Asian Open. But the time confluence can be another very important confluence in your criteria list. And afterwards the uptrend unfolded, the market retested previous highs, and the uptrend was really started here on the 1, 2, 3 pattern. One very important thing to note is when you're trading reversals is that you're not trying to catch the absolute bottom of a trend. You have to wait for clear signs that the powers are really shifting, and that's one of the main issues that traders have is when they think about reversal trading. It's not about calling the absolute top, it's not about calling the absolute bottom. You really want to wait for a price confirmation that the trend dynamics are changing, and that's where you then find the more safer part of the new trend that is occurring later on. We will get back to the video in a moment, but I want to show you my new trading program where I've packed my 16 years of trading experience in just a few hours. In the trading program, you'll get a brand new trading course with over 80 videos, and I've included ready-to-use trading strategies with rules for entries and exits. You'll learn about risk management, psychology, and so much more. There's also mentoring included, and you can reach out to me 7 days a week in our private community. I'm always there to help. And if you have any questions about your trading, you want to get my advice on a chart, you can reach out to me and you will always be able to interact with me directly. There are regular live webinars taking place and you will become part of a lively community with traders from all around the world. We have had great feedback from our community and from our users, and the Tradecademy is the program I wish I had when I started trading 16 years ago. I am your mentor. I'm not using other teachers, I'm not using other mentors. You're always interacting with me directly and you can reach out to me 7 days a week. The program works for day trading, swing trading, and basically all the time frames. Make sure to check the link in the video description to find out more about the Tradecademy. There's also a discount code waiting, so if you want to join now, use the discount code provided in the link and you will be able to save on your subscription. I look forward to welcoming you in our Tradecademy. And now back to the video. Let's look at a more complex trend continuation signal. The market is in a downtrend, we have our accumulation, the market breaks out and has retests, the uptrend is started here. When you're missing the first uptrend move, instead of just chasing the market at a random price point, wait for the market to give you a new corrective phase. At one point, the initial trend wave is going to stop and we have to evaluate this correction period. How strong is it? Is there still a lot of buying interest? And how does the market transition to the next phase? What you can also do is add a moving average. For example, I added the 20 period SMA, and very often you will see that those pullbacks are reaching the 20 SMA. You don't want to see that the market is significantly breaking and violating the SMA, but a move around the SMA is a good sign. Then the market is breaking out of the structure. The market is breaking out of a trend line, but in my trading I don't like to use trend lines. What I prefer is horizontal levels. They are a little bit more objective. And we're waiting for the market to make a new higher high point. We can also add a pivot point. This is the daily pivot point indicator. You can very nicely see that the market retested the pivot point and also that the pivot points still keep moving higher. I made separate videos on my YouTube channel about pivot points and you can check them out as well. The next trend wave here out of the breakout was not very strong. The market did move a little bit higher, but immediately entered the next correction phase. That's totally normal and we have to keep observing this corrective phase to evaluate, is the bullishness going to continue or do we see more signs of bearishness? This was the second corrective phase. The market retested the pivot. It didn't break the moving average at all. We had the breakout here and then the market moved into the next impulsive phase. Next, let's talk about the triple tap and we're going to look at it as a retest pattern. The triple tap is observed here at the highs. We have 3 consecutive higher highs, but what we can see is that the distance between the 3 highs is getting smaller, which shows you that the market is losing strength, so the bullishness is not as strong anymore. We can observe and analyze the price action between the high points. Between this high and this high, you can see we had a long period of sideways phases. There was also a strong selling period. Between this high and this high, the market did move higher a lot, and you can see the bullish phase was very short. So once you see that the bearish phases are increasing in size and also in strength, and also the period of the bullishness is decreasing and getting weaker, that shows you a significant shift in the market. The market rolled over here in a very strong fashion. This could also be news driven, and a lot of traders will miss those types of moves. And that's totally fine. Again, don't chase the market, wait for another opportunity. And what we can do is that we identify here this strong fair value gap and we wait for the market to move back into the fair value gap. In the fair value gap, we then look for our next price action signal. Here we have a fake out. We have this double top that was building here. The market pushes above it, fails to reclaim the highs, moves lower, breaks a low and retests it now from underneath. So overall, after the triple tap and with a significant shift in the bearishness that we can see here, the market is now already in a bearish scenario. And the overall trend is bearish. With the retest and the new pattern in the fair value gap, that helps us find secondary trades. I've mentored many traders over the years and chasing the price is often one of the big issues that traders are struggling with. But very often, if you just wait a little bit longer, you will often get a new opportunity later on. And in the end, you will always be glad that you waited for the next good opportunity instead of chasing the bad one that you missed. And then on the retest, the market started the new impulsive trend wave to the downside and it continued the overall bearish trend dynamic. Let's talk about the Bollinger Band continuation signal. What we have here is a standard Bollinger Band, 2 standard deviation, 20 period SMA, and those are the default settings in your TradingView or in any other trading platform. In a trend, we want to carefully observe how the market is trading around the Bollinger Band. When the market is in a strong trending market, you will see that the price is closing at or outside the outer bands. So here we are now in a strong downtrend. The corrective phase afterwards is very weak, Why is it weak? Because the price is not able to reach the highs. We see a contraction here in the Bollinger Band, which shows you that you are in a corrective market. And if in a corrective market, the market is failing to touch the opposite Bollinger Bands, that's often a signal that the next continuation push is going to likely to succeed. We see that here we have a support level, the market breaks out outside of the Bollinger Band, which is a very strong bearish signal, and the market continues its way down. Here we have a very short contraction of the Bollinger Band. The market eventually moved a little bit lower, but not enough. And a little bit later, the market pushed into the opposite side. And that shows you that the downtrend is likely to be over at that point, because this is extreme bullish strength. You can also add other patterns to the Bollinger Bands, and you can combine price action and indicator signals very nicely. The market reversed from a strong bearish trend to a strong bullish trend. We are trading outside or at the outer Bollinger Band. The market enters the sideways period here. We retest the moving average here, which is the 20 SMA. We have a good flag pattern. The market breaks out, moves back outside of the Bollinger Band, and then continues the market higher. And then we are now in another contraction period. The Bollinger Bands are coming close together, which shows you that the market is in a sideways period. Now it's about evaluating what the market is going to do next. Is the market pushing higher, continuing the uptrend, or is the market reversing and pushing into a new downtrend? Let's talk about fake out reversals. Fake outs are really popular, and I also like to trade them myself. I have added the 50 period EMA, which is a great indicator for trend trading. The market is in a clear downtrend, trading well below the moving average. The market is making lower highs and lower lows. This is kind of changing here. We see the first signal that the bearish trend might not be as strong as it seems at first glance. The market breaks below the previous lowest low and is immediately rejected. When you see immediate and strong rejections at a previous low point, that can often be a hint that the trend is not as strong anymore. Especially when we're looking at a mature trend where we have had multiple trend continuation waves into the trend direction. The longer a trend goes, the higher the likelihood that eventually you're going to see a reversal. However, we still need to wait for the market to break the moving average and also to change the trend structure. As we have learned in the beginning of the video, we want to see that the market is making a higher high. This is happening here. The market is breaking above the highest point here. We also have the fake out, we're breaking above the moving average, and the market is now rolling over into a new uptrending period. So the fake out is often the first sign of weakness in the trending market. Instead of using just the fake out, we can also look for divergences in our reversal trading. Here, once again, we see the triple tap. We have 3 consecutive higher highs, but each high is weaker than the one before. We are also already seeing here signs of a lower high. When we now add the RSI, and this is the default 14 period RSI, we can see a divergence. Whereas the price is making higher high, the RSI is making lower highs. This shows you that the price action and the indicator are not agreeing, and that's what we mean when we talk about a divergence. We already see that with the triple tap there is weakness here at the highs, and the indicator confirms that in an objective way. We can also add our pivot points. Those are the daily pivot points. The market is now trading below the daily pivot point, we have the divergence, and now we're breaking into fresh lows. We have 3 very strong confirmation and confluence signals that tell us that the uptrend is likely to be over. During the downtrend, the market keeps trading below the daily pivots, we retest the pivot point from underneath as resistance, and the downtrend is played out afterwards.